Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 26th of May, 2020. We're at 5:45 p.m. Central Time. So we came back from our Memorial Day holiday. The stock market blasts forward. Euphoria that the drug companies, they're entering other phases now. Nobody's got a cure. Nobody's got a vaccine, friends. They don't even have a treatment yet, but the fact that the phases are moving on around the world, and the word is around the world, not just in the United States, gives people a ray of hope that things are going to get better. In addition, this virus has a tendency to dispel itself in the hot weather, but it comes back in the cold, and that's a problem for Brazil because they are now entering their fall-winter weather time. And as that's happening, their cases are soaring. So we're already in the United States and Europe looking at what goes on there because that'll give us something of a battle plan or what to expect at least if we don't find, or if we do find a treatment, a vaccine, or nothing. What do we do? Do we go back into hibernation? Don't know. But right now, you don't fight that. You're fighting the fact that what? You don't fight it. You join the euphoria. Factories are opening, restaurants, beauty salons, barber shops, everything to some degree is trying to reopen. Now, I saw reality also, and since this is the financial market wrap-up, you know, you're going to see restaurants in a real hard place. I don't care if they're the top-end chains. I don't care if they're the bottom-end rung. The bottom end might be better off right now because the drive-thrus and all work. What do you do with a restaurant that's built for, say, 300 seats and you can only occupy at 150? Your business model doesn't work. The landlord's going to have to cave in the rent. The mortgage holders got to agree to extend things. I mean, it gets very complicated. It can work. It's going to take a lot of parts to the puzzle, and I don't know what that means. Very important also is the fact that people are outraged, that people don't want to go back to work. They're making more on unemployment. The president's working on that with an idea of a bonus for people to go back to work. A bonus to go to work. I love working, so to me it doesn't matter. In the S&P 500 index, you can see how this market has rallied smartly. It has now been able, and this is what, if we come back here, that was the first week last week over the number, and this is the second week so far. Remember, we're going to be through this week just like that because it's a 4-day week. But that's power in the market. It gives it a bullish bias as well. When I take a look now at the chart, it's pretty hard to take your Fibonacci counts from there to there when you've gone over the 62% area, so I throw them away. It's that simple. They just didn't work. Not everything does. And I realize there's the skeptics out there that still think you'd get back down here, because this was the shortest bear market I ever remember. But the market is now saying and doing more. It's going sideways. I can't get away from what I told you about a week and a half or 2 weeks ago. It's got all the feel of that 2009 time frame to me when you didn't believe the market had finally bottomed after that terrible Great Recession we went through, and when it came alive, it climbed the constant wall of worry. It's similar. That's all I can say. I feel the similarity in looking at the chart. And it's a hard chart to trade because market, after this big of a rally, has got to consolidate all this. So you get what we call these higher high, lower low patterns. Makes it difficult to trade in them. You're back into a key resistance area. The 100-day average of closes, which a lot of traders look at, is in green. The 200, very important number in the S&P, is right there at the 2997 level. Let's call it near the 3000 level. And your Bollinger Band. I said on the way up to these numbers that that's going to be a lot of resistance you have to deal with. I have not changed my opinion. So, end of discussion. I still see this as a big resistance area. Let's see what it can do with it. When I take a look at momentum, when I add the slow stochastic, well, you can't count tonight because we don't know how Wednesday's going to finish up, so we go to Tuesday. Both numbers over 80, but not the day before, and they weren't the days before then. So we have an overbought market into key resistance, and I think pros are probably taking some money off the table. The Nasdaq flip-flopped on traders today. So if you were watching XLK, the tech sector, and or the Nasdaq, QQQ, and this, you noticed one thing. They were weak. the whole day. It was other parts of the market, be it the airline stocks, the cruise, everybody feeling better about things, the Disneys, the store stocks might be coming up a little bit. In other words, retail. You've got to start thinking that as people are outside and as we approach June 1st and a lot of the barriers fall in some of the states, we'll see what the new life is going to look like. If you watch TV the way I did over the weekend, I was appalled. I mean, I'm looking at beaches where people, that wasn't social distancing, bars. There were so many different areas I'm looking at. I'm just going, oh my gosh. They're just throwing caution out the window. They're saying it's over. I don't think it's over. I'd be cautious. In the Dow, you're up at the top part of what we call a pipe. See the black dashed lines? These are Bollinger Bands. The market will trade within Bollinger Bands 95% of the time. To break out, in my theory, this is just me, I need 2 consecutive higher closes over the top band. You had one today, you're immediately pulling back. That's not it. If it stays like that and doesn't close above it, all you did is pushed out the band a fraction, but you haven't proven anything. Trend up, overbought momentum, bias up, and starting to approach the 100-day average of closes. In the Russell, big resistance right here. The 100-day average in the upper Bollinger Band. So you're coming back to visit them. In the past, that combination has proven to be lethal when you're trying to get something going and you're trying to fight it. So we'll see if that's the case. But I think the bulls have control of the market. I do think the pros are stepping out up there. I think they'll let somebody else carry the day, and then they'll come back if they have to. And that overbought condition is nobody's friend. In the VIX, you haven't hit the lower Bollinger Band again, but I still expect that if you get to 2605, 2531, I think they'll start at 2605, writing puts all the way down to the 2531, seeing if the market can get back to the 18-day average of closes. Oversold, not embedded. The first challenge of it, just the way it did here, just the way it did here. It doesn't have to repeat itself, but as I've pointed out to you back in these time frames, markets like to find a zone that they can play off of like that. That's what I'm looking for from the pros. I see the bonds and notes just churning people up. This is just in this, what we call this pipe, just spinning away. And that's what it's doing. You break down, you go to a higher high. You break down here. Now at least you have lower highs and lower lows. But where are you going? 177.28 is the next objective. At 6 ticks away. It's not very far, so I'm a little concerned there. 10-year notes stuck in this. Remember what we just showed in the VIX? This is very, very reminiscent of it. Which way you're going to break out of this is what I'm looking at. Then we get to the dollar index, which is trying a downside break. Now it hits today the support of the lower Bollinger Band. What's the rule? Get down there. What am I looking for the pros to do? Today's low is 98.89.5. That number's 98.87.5. So I'm looking for the pros if it can get a little bit lower here to cover their shorts. You're oversold, approaching the 100-day average in that number. Nah. You say, okay, if it then starts breaking out through this, there's room enough on rallies start selling for a real breakout. This would be then considered a massive top in the market. I can't call it that yet because it hasn't broken out. You haven't broken out in the eurocurrency. You've got the higher lows, the higher high. You got up right here to that upper Bollinger Band, and I know I was telling you, I thought the pros were going to back away, and I think they did. And as it turns out, today was a big spike higher in the market as people feel good. And if they feel good, well, foreign currencies might gain against the dollar right here. You don't need the protection of the dollar right now. The Japanese yen drifting sideways in, again, these Bollinger Bands. This is called a pipe. It's not as narrow as I like to see, like the bonds and notes, but it's still nonetheless one of those. Oversold, refuses to embed, difficult condition to try to trade from. Bitcoin, the correction from the upper Bollinger Bands finally set in. Maybe you go to the lower band here. The trend is down. You negate the downtrend if you take out 93.70. Right now, bears are in control of this. Bias down, momentum down, and not oversold. 84, 85 to 8,500 is the zone I'm looking to see what support looks like. Then we get to the differential between the July Brent and WTI. And it's gone again from over this 5 area back down to 188, 189. You're in a market that still has an embedded reading. What's embedded? Excuse me. It's when the two numbers that make up the slow stochastic are going sideways over 80 for at least 3 days or more. And when that occurs, the phenomena is one where I think it locks in a trend. Instead of getting overbought and staying overbought or oversold and staying oversold, I convert it. And until that red number closes back under the 80 level, I think the pros on the pullbacks are buying the market, trying to get out at the upper Bollinger Band or a window envelope. You've got to have window envelopes. I don't show them here. They're in my subscriber videos. In the as we turn over, let's go here to the WTI crude. This is not the same picture. You've got a lower low and a higher high. You've got the embedded reading. What rules the day? The embedded reading, number one hierarchy on the chart. It overcomes everything else. So until it's lost, I think the pros are buying. Now, I believe it's tomorrow we're going to finally get the API number at the end of the day, and on Thursday, the EIA numbers. Right now, there's room in Cushing. We've been taking stuff out of our stockpile. We've seen the lowest record amount of rigs that are at work right now, which tells me that we should be looking at draws coming on about in this time frame. We'll see if that is in fact the case right now. And what I think happens is, you get up in WTI into this $35 zone. I would say that there's some in the Permian Basin and other areas that are probably very quietly pumping again. And the reason they're doing this, they can make money on this. Now, that's important. Rebob gas, still strong. The driving season, did we have one for Memorial Day? I'm not sure. But if it's at work, until you lose that red line under 80, the pros, I still think, are buying this market. Now, oftentimes, if this were a normal holiday, I'd be looking for the market to fall back now because you'd say, well, we had the Memorial Day season. Because of COVID-19, it's all thrown out. You don't know quite where you're at on that drive demand. Watch your, AAA, and you see what they're doing. It's going to be very, very wild to see what driving is this year. Then I get to the nat gas. Now, I know we hit 90s in Chicago this past week. Chicago, but other parts of the country are getting warm and unusually warm. So I'm starting to wait for the demand to come in. I have no interest of being a buyer in the market under the 18-day average of closes. So it's one of my filters. I wait for what's going to happen. Did we ever embed here? So let's take a look at this. There might be another trade setup. If we take a look together, we've got right here, one of the numbers is over 22, then both get under 20. They stay under 20. They stay under 20. Would you agree? Still under 20. Now, May 27th. Gee, what's today? 27th of May. The market's losing that reading. That's your sign, to me at least, that the pros are covering shorts, looking for the market now to get back up here if they're watching this. Admittedly, we're only at 6 o'clock or so this is a long way from the close today. But you lose the embedded reading, what's my rule of thumb? Unless you gain it back right away, which would be on, I guess, Thursday, you're probably making a run to the 18-day average of closes or the nearest moving average, in this case, that 18. I talk a lot about what we're doing here, and a lot of this I cover in the Spider ETF videos for you. And I offer the same type of analysis, both here on YouTube, free, but then what I do for my subscribers. And believe me, folks, I keep adding. I've got more energy now, ETFs in there. I keep adding to them. UNG was just added. I'll just keep going all the way through. I want to get about 35, 40 charts. And then I break them into sections, because when you go see these, let's assume you wanted energy. If you go to our website and you're a subscriber, you just drag on the video and it lights up. You're in energies, you're in metals, interest rates, let go, and away it plays for you. How do you get this? Go to our website, www.iraepstein.com. Under the word research, take a look. I've created short videos to explain these, how they work for you, and away you go. You sign up right there. I'm Ira. Been fun talking to you. I'll see you all tomorrow.